Anshul, good to have you on board. Let's get in a sense as to what your outlook is then when it comes to the entire telecom space. We just flagged that off with respect to the SC ruling that we'll be expecting. How are you looking at that impacting the telecoms players?
Good morning, Avan. Telecom in general is, is an interesting play at this time. There are many pushes and pulls in that sector. While ARPU in that sector has bottomed out, and clearly that is on an upswing, we are seeing the leading players having seen as much as a 100 rupee increase in ARPU over the last 3-4 years. On the other hand, there are some competitive pressures as also regulatory pressures which the sector is seeing. Now, in this balance, it is our belief that over the next 2-3 years, given how consolidated the industry is, this industry should see tailwinds, and earnings clearly have bottomed out, and there is some tailwind even in earnings, which is likely to get reflected in stock prices. So clearly, this is a sector which has interesting dynamics going forward. And if there is if your investors are invested here, I think that this is a sector to stay invested in.
I'm just scanning through what is happening in the consumer space, and casualty after casualty, the biggest one, of course, has been Honasa. Anshul, it surprises me to see that hotels are doing well and consumers are not doing well. Hotel spends or travel spends are always supposed to be discretionary. Consumer spends, which is when it comes to basics like HPC, food, BPC category, they're supposed to be necessity. So necessity spends are down and discretionary spends, which is luxury and which is disposable income, is high.
Good morning, Nikunj Bhai. Pleasure to be with you. It is an interesting dynamic, clearly. If you look at within discretionary also, I mean, the definition of necessity keeps changing depending on the mindset of the consumer. Take, for example, air conditioners. Now, this is a discretionary space where over the last many years, people would see cyclicality in the sector, and there was an expectation that as the cycle tapers off, the sector will also taper off. The demand in the sector will taper off. But what we are seeing is that more and more the Indian consumer is looking at this segment as a necessity and not really a discretionary spend. And as a result, that cyclicality over the last many seasons has become far less pronounced as it used to be in the past. Similarly, experiences over goods. Experiences have become a necessity. Buying goods, hoarding goods is becoming less of a necessity. Hence, you are seeing travel and tourism see as much tailwinds. I mean, whether it is luggage or it is hotels or it is even airlines, we are seeing both price and volume uptake in this space. And that is, of course, leading to demand patterns changing. I mean, that is because of demand patterns changing materially. And margins in this space, travel and tourism, are reflecting that tailwind in demand. So clearly, the definition of necessity and the definition of discretionary, those have been adjusted over a period of time, and some segments are doing discretionary segments are doing very well. To our mind, consumption by and large should play out in the next year. That if I look at I'll take another 30 seconds and explain this phenomenon, please. If we look at the last 2-3 years, government capex has been quite strong, but the transmission of that government capex into consumption has not been as strong as one would have expected. Rural economy has been weak in this period. But going forward, it is our assessment that in the next year, it will be this discretionary spend which should see an uptick. And what is interesting is that because it has been weak in the last 2-3 years, valuations in this space are quite attractive. This is, a space which has quality companies, and those quality companies trade at attractive valuations. next year should be quite interesting for this space in our judgment.
When you see a stock like Honasa tank, Anshul just wonders that could it be a good time to buy into this panic, because those who bought the panic in a Policy Bazaar, Zomato, even Paytm, they've been rewarded handsomely. Is it a good time to look differently and say, okay, I know the problems, markets know the problem, it's a great company, the promoters are committed, it will bounce back? Should that be the spirit in Honasa also?
I would say that it is very critical to keep your eye on valuations. Um, Many of these, D2C players or even the internet plays came at valuations which were really nosebleed valuations when they listed, and from there itself they traded up thereafter post listing, and that froth needed to get corrected because really reality needed to set in. There were quality businesses in similar spaces which were doing quite well and which were trading at a fraction of the valuations of these new listings. In the name that you mentioned, clearly that froth correction is happening. There are also nuances to the business which one will have to really look at before assessing whether valuations are building in all the near-term dynamics or not. In our judgment, it is better to wait a little bit, see the dust settle before you go in and buy into some of these names, and let this valuation fraud get out of the system before you can go in and look for bottom fishing. So that's a prudent strategy, a prudent and risk-averse strategy in this space is a better way to go than actually jump in with a correction in the short term.
Anshul, what do you make of the recent underperformance in the stock price of Reliance Industries? Are the fundamentals really matching this move on the downside?
Aman, is that for me?
Yes, Anshul.
Okay. So there has been clearly a moderation in valuations in that space in for Reliance. While I would refrain from speaking about individual names, but there are many parts to that business. Some parts of that business have really not performed, whether it is oil and gas or even retail. Those have seen some headwinds in recent times, and that is getting reflected in valuations. For the long term, you could very well say that this is a company that mimics the India growth story, because it has a large part of its business which kind of gets reflected in the telecom and technology space, as also in the retail space. And as a result, in the long term, this is a business that should do very well. Short term, this volatility is because of near-term pressures. But if you're a long-term investor, clearly this is a stock which mimics the India growth story. So staying invested for the long term is really the right thing to do here.
Okay. GIF Nifty or implied Nifty is indicating that we could be in for a mild nick here or there. 74 to 75 points down, that is what the implied Nifty seems to be indicating, that where we should be in for a start. So, Kunal, just when it appears that, okay, markets oversold, you got that good Wednesday, no follow-up on the GIF Nifty on Thursday, on Wednesday, and it could be another poor Thursday.
No, in fact, Nikunj, till yesterday evening, the GIFT 50 was almost 23.
I saw 200 points in the afternoon, and then by the night it just faded away.
And I think because of the news flow which has come today morning, that's one of the reasons why you're seeing this sharp impact. So I think it's now back again that how quickly can the markets digest this kind of a news flow and then try and get back into a settling on a trading range. My expectation is that maybe 23,300 is a level which the index could hold on, but it's very difficult to say because if the India VIX keeps on rising, so we were almost on the verge of hitting the 17 plus mark and closing above those levels. If we manage to scale past about the 18.5 levels for the India VIX, then the impact on the downside for the index and the volatility would continue very, very severely and sharply for the index. And that may not let the index settle into a trading range. So the only port of call which we can expect first is at 23,300. could be an important support if we manage to break below those levels, and if we do that with the India VIX rising above 18 plus mark, that I believe could probably indicate that we may be looking for a further sell-off for the indices.
All right, stay with us. Meantime, in a bid to curb the excessive speculation in the F&O segment, SEBI had proposed 6 key measures which take effect from today. Ansh joins in with a sense of what to watch. Ansh.
Well, yes, SEBI's new rule for index F&O contract have come into effect from today. Now, this change is focused on increasing the contract size and streamlining the weekly expiry. Let's break it down. First change is lot size revision. Now, SEBI has revised the minimum contract size for F&O index from 5 to 10 lakh to 15 to 20 lakh. Now, to meet this requirement, both BSE and NSE have revised their lot size for the indices. On Nifty, it has been changed from 25 to 75, Bank Nifty from 15 to 30, Fin Nifty from 25 to 65, especially Sensex from 10 to 20, while Bank X from 50 to 30. Now, existing contract, however, will retain their current lot sizes until they expire. Second key change is weekly expiry rule. Now, SEBI has limited weekly expiries to just one per exchange. On NSE, it will be Nifty, and on BSE, it will be Sensex. Now, this aims to reduce the volatility and increase the liquidity in the market, providing a more stable trading environment. So in short, there are only 2 major changes which are happening. One is revised lot size, and second is limited weekly expiries.
Volumes will go down, but from 20th of November, which is next Thursday onwards, 45 new stocks will also be part of the F&O. And those are some real names where you will see serious price action and price adjustment every time there is news and quarterly update or results. DMart for one, Geo Financials, Zomato, KEI Industries. The criteria of F&O inclusion was changed a couple of months ago. So obviously, exchanges has put them after the criteria was met. But the list of names which essentially would be part of F&O now, Paytm, Policy Bazaar, and these are stocks where you actually would see cyclicality in terms of the earnings. Especially in companies like DMart or Paytm, Zomato, these are high growth businesses, but there could be cyclicality in the numbers. And now they are part of F&O. You actually would see a lot of price action there. So we are in for some, I would say, interesting moves in some of these stocks which would be in for F&O inclusion very soon. So Anshul bhai, how have you used this decline to your advantage? Have you reduced your cash positions? Have you tinkered around with your portfolio? Have you shuffled it around?
I have looked at this minor blip in the markets and observed that companies which have really fallen too much, Nikun bhai, are the ones where earnings stability has been in question, as also corporate governance has not been pristine. Companies where earnings volatility is limited and where there is long-term growth potential which is undented at this time, those have really not corrected too much. As also companies with strong corporate governance have also been quite strong in terms of their stock price action. For me particularly, of course, I've reduced my cash positions at this time. I've added into names which I already own, where I do see that there is a strength in future earnings growth, and yet because of the volatility, price action has been adverse. Those names I've added at this time, and I am an investor who's not investing for the next 2, 3 months, 6 months. I'm someone who's investing for the next 3 years, 5 years, and looking at myself as a partner in the businesses that I'm investing in, albeit a very small partner, sometimes 1% shareholder in the company, sometimes lower. But whatever, if the business does well, then these stocks do well over a period of time, despite the volatility in the short term. And I'm quite confident. I've also been attending a few investor conferences of late. The tenor, the body language that I'm hearing from companies is that this cyclicality in earnings is only temporary. Long term, they're extremely bullish on their businesses and on the India story. If they are bullish, I'd better ride on them, If I don't make money over the long term with these quality promoters in India, and I trade short term, then I'll be doing myself the biggest disservice as also your investor community.
Kunal, let's get in some chart checks going. Have you had a look at REC on the charts? What's the view on PFC, REC?
Yeah, I think so far, interestingly, REC and PFC, both of them have been a bit more sideways. But the pattern for these stocks, and I've been following the stocks over the last two to 3 weeks, that for example, REC has been stuck into a range of 500 to 535, 540 approximately. Now, in this range of 40-50 points for REC and similar as the charts for PFC, the stock has formed a triangular pattern. So 540, for example, is acting as a major resistance. We tested towards 530, 535 just about 2-3 days back for REC. We managed to come back towards the 500 lows for the stock, but we managed to bounce back again. So the range is getting narrowed. That's result into the formation of a triangular pattern for the stock price. And in an ideal scenario, we typically wait for the stock to complete this triangular pattern, because it could be touch and go for either of the sides. The stock can break past above 540 levels, and we've seen REC PFC being a lot more volatile. In fact, a couple of days back, when the market saw the first leg of a bounce back, we saw stocks like REC PFC moving up by a margin of 5-6%. So when you have such kind of a scenario, it's very difficult to anticipate which side the stock would break out. 540 on the upside is a breakout for REC. If we see a breakout above those levels, we could be looking at the stock hitting 580 to 600 also over the near term. But on the downside, 500 remains to be a very critical and a crucial support for the stock.
Okay, interesting there. That's the chart check on PFC and REC. Meantime, Naresh was curious as well to get in your take on the charts. And what about the metals basket? What is standing out within this space?
So in the metals basket, the only name which looks interesting is Nalco, purely for the fact that alumina has gone up to 750, 780 levels. Aluminium continues to be at 2600, 2650. The second choice comes out to be Hindalco, which has also corrected from the top at around 600, 650. It looks like a good entry point. In terms of the other steel names, we've seen a slow drift on the downside, so would wait it out for now. But structurally, aluminium looks more interesting than steel as of now.
Okay, fair enough. That's the take coming in on some of those metal counters. Meantime, let's also put the spotlight on the latest report that has come out from Citi. They've come out with their India strategy note, and they've changed their stance for quite a few sectors and stocks. Citi sees the Nifty target at 25,000 till September until next year, an upside of 7% from the current levels. Let's understand the other details of this report. We've got Anisha here joining in. Anisha?
Well, hi, good morning. Well, Citi believes after the 10% correction that we have seen from the top, the valuations have become a lot more reasonable. They're talking about how the Nifty valuations are just slightly above the 5-year average that we have seen, so a lot more reasonable versus the peak that we had seen earlier. Yes, Q2 earnings have been weak, but it's only in certain pockets that there has been that weakness. They're talking about how consumption was a bit of a weak set, but for rest of the sectors, it has been status quo. In fact, we have seen double-digit growth in financials, industrials, healthcare and some other sectors as well. They are expecting a potential recovery in the second half of the year led by the public infrastructure, as well as the fact that overall rural demand is expected to pick up further. So that's the tailwind that they're watching out for. However, the monitorables that they are concerned a bit about are the asset quality as well as urban consumption. So these two remain the key monitorables for them going forward. In terms of the sector calls, they continue to be overweight financials, telecom and pharma. They are underweight consumer discretionary at this point of time. IT is something that they're looking at avoiding, as well as metals. They have managed to upgrade cement to an overweight now from neutral earlier. Post the underperformance and the sideways move that we have seen and the fact that there is expectation of a pickup in the second half of the year, they think that the valuations are reasonable enough to dabble into the cement sector. And yes, the September 25 Nifty target is just around 25,000. So not that we are looking at making fresh peaks of that 26,000 past level that we had seen earlier. 7% upside from the current level, so fairly tempered and moderate in terms of their expectations for the next 12 months from the index.
All right, thanks very much, Anisha, for giving us that roundup. That's interesting in terms of the mid-cap picks as well that have been added to Citi's portfolio. And wanted to get in your take, Anshul, any observations that you've made? Ramco, Jubilant have made their way, Devyani out. Any views on this entire QSR space?
Yes, Aman, QSR is an interesting space. Last many years, the stocks have really done nothing. And on the other hand, you've seen much of their business being taken away by the likes of Zomato and Swiggy. People are just preferring to stay at home and eat rather than go out and eat in restaurants. On the margin, I'm saying. Even anecdotally, if you speak with some of the QSR players on the sidelines, which are unlisted, they will tell you that their home delivery business is doing far better than their QSR business. This is a trend which one will have to see whether it is a long-term trend or it is a flash in the pan and this will change. If it is a long-term trend, then QSR companies, even despite them having not done so well over the last 2 3 odd years, it looks like there is further room for consolidation in QSR companies because valuations are expensive, even at these levels. So we are on the sidelines in QSR. We are watching this space. It looks interesting, but we will need to see signs of revival in demand patterns before we enter.
I just want to mark, Adani group of stocks here. It's just like the first initial flash of the first pre-open rates. But given what the news flow is, at least what the global media is reporting, the stocks could be under intense pressure. Adani Green, Adani Enterprises, Adani Power, Adani Ports, Adani Transmission. There is going to be a bit of a struggle. These are pre-open rates. Of course, they may settle, they may not settle. That's anyone's guess. But whenever there is a bit of a news flow here or there, which markets are not particularly excited about, the market reaction these days has been very harsh. Honasa, do we have a bottom in place? Again, these are pre-open rates subject to change, but it could just bounce back. 271 for Honasa. Things cannot fall in a straight line. Paytm, there's a Bernstein upgrade this morning. Could that have an impact on the stock? It was languishing at the bottom of the barrel till about 6 months ago, sub 400. It's become 824. Paytm, Kunal, has rallied almost 100% from the low, right?
Yeah. So 310 approximately was the low, to be precise.
Where is it headed now? Four digit?
Should be. I think there should be a natural move towards the 4-digit mark for Paytm. The all-time high for the stock was, of course, much higher. It was almost 1800 plus levels for the stock post listing for Paytm. The stock was beaten down significantly, and now it's onto a reselective move. So what's very interesting about the charts for Paytm is, as you can see, that the stock has moved into a very gradual kind of uptrend. It's not been very volatile as a move on the upside. So when you see a change of behavior, for stock prices from being extremely volatile, very high beta, V-shaped rallies, recoveries, sharp corrections, and then once the the volatility changes, the beta changes for the stock price, it settles into a very slow gradual trading range on the upside. That's where trends start sustaining. So we saw an initial breakout, for example, when the stock crossed 560, 600 levels of its 200-day moving average, and that was almost after a gap of 8-9 months for Paytm. And now the stock moving above 800 levels, settling into a trading range, not participating, for example, even in this last 5-6 weeks of the market volatility. That itself is a sign of strength, and I believe that the natural move now should be that the stock would continue to move up higher. The base for the stock now on the short to medium term charts is closer to that 750, 740 mark. So keeping that as a trailing stop loss for medium term investors, I think traders could look out for a long position over here.
All right, let's find out then those mid-cap trading strategies as well. As you've got the pre-open rates at the bottom of your screens, it's looking like indications of a fairly decent start. Anshul, going to let you go at this point. Thanks so much for joining in.
If you like this video, then like, share and subscribe to ET Now.